This course, just like the 6 others that we have been offering to you, is all about helping you, and we're helping you in different ways. And this morning, we want to help you so that you can make your money work for you. I know that we are all, business owners, and we're busy. We're busy working for our businesses, for the welfare of our businesses so that we can make profits. But did you know that you can also not only employ your assets and employ your staff, you can employ your money to work for you. And that's what this course is about. So that as you work hard, your money is also working for you. And together you're able to increase the return of your business. Secondly, this course is about helping you to cushion your business from disruptions, just taking over from the conversations that we had last week when we were talking about working capital management. And we say that one of the worst things that can ever happen to you and me as business people is running out of cash. And this is where your savings come in. As you're running the business, sometimes maybe delayed payments or things are going on, you'll still be able to run the business if you have some savings aside. And then savings also help you to grow your business systematically and progressively over a period of time. Of course, savings also help you to access capital to access a credit. So when you want to take a loan and you have your savings there, they can act as collateral for you, and you can be able to access this extra cash, which you can use to do one or two things at the business. And of course, this course is about helping you to weigh those options. I've seen some of you are saying, which are the options that are available, for me, and that's what this course is all about. Why are savings important, to your business? Your savings are going to help you in the event of an emergency. For example, you have a piece of equipment, and this equipment is helping to generate certain products which you are selling. And then one day, the machine breaks down. That's an emergency. And you see, this is affecting your business. So if you have some savings, you're able to quickly make some some adjustments, and then you have your machine up and running, and you continue to generate your income. Savings also earns money for you. It earns that interest for you. Savings improves your credit rating. Savings is about a discipline, the discipline of setting aside, and that goes a long way in helping you, in terms of rating whether your business is worthy of that credit. And of course, as we said earlier, your savings can also act as collateral as a cash collateral to support your borrowing. And so we want to focus on in terms of products, just 3. We want to look at savings accounts, and then we want to look at time deposits, and then we'll also look at money market products. So let's start with savings. So when we talk about savings, a savings account is actually an interest-bearing account. So this marks the difference between some people who say, let me put the money under the mattress or something like that. This is an interest-earning deposit account, which is held at a bank or at a financial institution. So when we talk about financial institutions, these are organizations that are in the their main business is really just to deal with monetary and financial transactions. Advantages here: very easy to open, and we've seen a lot more of that. Initially people would say savings is somehow impossible, but now even with 1,000 shillings you're able to open that account and you can save. So it's not really the amount should not deter you. These are easy to open. You earn interest. Yes, I saw that feedback in the chat box. They're easily accessible. So if you have an issue and you need to access the money, you can do that. And also, they can secure your borrowing. So as your money continues to earn interest for you, you have the opportunity to get extra funds, based on borrowings. Awesome. So what do you then think are some disadvantages of this type of savings product? Let's go to the second one, which are time deposits. And when we talk about time deposits, we have 2 types of savings options that are available to you. So when we talk about a fixed deposit, this is an arrangement between you and the bank where you leave your money in the account for a particular length of time in order to get a higher fixed rate of interest. So when we talk about an FD or fixed deposit, that's what we're talking about. And then on the other hand, we have a certificate of deposit, and a certificate of deposit is issued by a bank to a person depositing money, or a financial institution, a bank or a financial institution, for a specific length of time and at a specified interest. So that's what a certificate of deposit is. Now, they sort of more or less look the same. So let's just go ahead and distinguish what is the difference between an FD and a CD. And the first difference is the transferability. A fixed deposit, you're not able to transfer those funds to another person. So we say fixed deposits are not transferable. Another difference is that the FD pays interest at a specified period of time. So maybe after every month, after every year, depending on the arrangement. The money market, we have several markets. I know last year we were talking about the importance of operating within the digital market, and it's a real market. There are transactions that are taking place there, and many of us can all of us can bear witness to that. There are the traditional markets, there are capital markets. So this money market is all about trading in short-term funds. So there's a lot of money that is circulating in these money markets at any given point in time. And the trading takes place in terms of, assets, these assets that we call, for example, there's some examples given there of government securities and so on. So here we're talking about money. You're able to exchange this money and make a profit within a period of about a year. So some examples there are treasury bills. We refer to these commonly as T-bills. And you can see there's the 3 months, 6 months, and 1 year. 91 days, 6.87%, 7.25% for 6 months, and 7.85%. So of course you notice that the interest is tiered. The longer the period, the more the amount of money, and the longer the period of time, the more the interest that you're able to earn out of that. There are certain risks that each of these options present, even as you think about seeing how you can maximize the return that you would get from the different products that are available. So all of these, remember that, I gave you an example where, for example, I have a CD of, I expected to get back my 100,000 and also an interest of 10,000. But then somewhere along the way, because I'm a bit desperate for cash, I sell it to Chakacha. You see, the 80,000 that he gives me is actually less than the 100 that I had initially invested. So that tells you that there's a risk that you could lose part of the principal and also the interest element. Another thing that business people, sometimes we are not careful to read the fine print. Please make sure that you read between the lines, and also it would be useful for you to get an expert advisor who will guide you on more, because this is their bread and butter, and they're able to advise you so that at the end of the day, you're able to safeguard your hard-earned savings, which you have invested over a long period of time. The magic of compounding is where your money earns interest, and then your interest, if you leave it, you don't touch it. That interest element, together with the principal, continue to grow your savings. And so as you get into the discipline of saving, you will see a situation where your interest becomes bigger and bigger, and the pool of money becomes bigger as you allow it to work for you. I want to share some practical tips that you can embrace. Number one, open a separate savings account. Number two, thank you so much. I see this came up, and this is a conversation that we had in the cash flow management course. And we said that after you have traded, because people say, you know, Sarah, I can't find money to save. So after you have traded, you have prepared your accounts and you can see what your profit is. Now just take a percentage, agree, if you have other business, owners, and agree, say, for example, 20%, and you say, out of our profits of last year, 20%, that one goes straight to the business savings account. That's another way of doing it. Another one, I hear people telling me, Sarah, how do you expect me to save if I don't have money? So when you receive your payments, you can decide as a business, we're going to take a small portion of every invoice paid, say 5%, and we're going to transfer that to the savings, account. Another one, why don't you use these lock accounts that are available? For example, Mshwari. Mshwari will ask you, do you want to, because the whole idea here is to encourage you to save, for the naysayers who say it's impossible to save. And so you open a lock account and it will ask you, so how long do you want to have this lock account? Maybe you say, actually the first thing it will ask you is, what is your target? So you need to write down your target. So maybe I can say my target is 100,000. By when? By end of December 2021. And so Mshwari will prompt you. It will send messages to prompt you, please make deposits into your Mshwari, lock account, for example. Another one, maybe you were expecting to collect from some customers, and last year they told you, what, COVID, and maybe you reached a decision to write off that amount, so you're not expecting to get it, and then good fortunes come your way, and a customer pays you. These are funds that you didn't expect. Maybe an insurance compensation, maybe you won a legal, court case, a suit or something like that. So you can decide, why don't we take 10% of that unexpected money and save it? And then we can use the rest for other, business, goals and objectives. Another one, just automate savings so that you don't have to still say, okay, I'm still planning to save and so on. So just issue a standing order instructions to KCB. Every month, please take 10,000 shillings and just move it to my Simba account. So these are some practical tips just to give you, which you can apply so that we can develop that savings culture. So some savings strategies that I can share with you. Number one, please adopt a savings culture. Another thing you can do, you need to reduce your costs. And I've seen, the chat box with those suggestions. And then be on the constant lookout for savings, opportunities. So if you want to be wealthy over the long term, you need to tie the savings and investments together. And that's why we're having this webinars to help you out. So savings is a culture. Train your business. The way we were having conversations around training your business to pay you a salary. So in the same way, train your business to save. So it's not about the amount, it's about the discipline and the reason why you're doing it. And then start today. I can't tell you how many people I have had this, okay, Sarah, I'm convinced I'll start next month. I promise I'll start next year, 2022. No, just start today and start to develop that practice of laying aside money that you can use. And we looked at all the benefits that you can enjoy as a result of saving.